Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over bar area 3. This is section C5. This is an application topic. Prepare journal entries to recognize interfund activity within state and local governments. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then after that, you're probably going to want to learn more. So make sure you also check out becoming a part of the pro course, where it's basically a much more in-depth version of the webinar, a lot more details, a lot more strategies. Or you could also get our study materials, our supplemental study materials, like our audio notes, our mini quizzes, our review notes. Or, of course, the best thing you could do would be to get the total bundle where you get the pro course and the additional study materials. And one additional thing that you can get access to, currently it's part of the pro course, and we're going to eventually switch it to the study materials, is the full versions of these YouTube videos. So typically, these YouTube version videos have 5 questions, but the full versions have 10 questions. Now, if I'm being totally honest, this is a fairly small topic that we're going over today, so the member version is only 5 questions as well. But in most of the videos, especially for FAR and audit and for BAR, the videos are 10 questions for members and 5 questions on YouTube. Again, this is a smaller topic, so we're only doing 5 questions for both. But if you like this, make sure you check out becoming a part of SuperfastCPA, because again, you can get access to the full versions of these videos. Now, with all that said, let's dive straight into the questions for this video. Okay, here we are at question 1. Let's just dive into this. The first thing that I always like to point out is reading the last sentence of the question first. This is a strategy you want to get used to doing because on exam day, you have no idea what you're going to be seeing in the questions. You have no idea what the questions will be about. So reading the last sentence first very frequently will give you context and give you an idea of what the question is actually about. It's not 100% foolproof, but it is a very good habit to be in, so we always do it even when it turns out not to be as helpful as we want, because most of the time it is helpful. So let's do that here. How should the funds classify the transaction? Let's go up to the top. The general fund lends $184,000 to a capital projects fund to cover a temporary cash shortage. The amount is expected to be repaid the following year. So again, how are the funds going to classify the transaction? Is the general fund going to record it as an expenditure and the capital projects fund as revenue? Is the general fund going to record due from other funds and the capital projects fund record due to other funds? Is the general fund recording a transfer out and the capital projects fund recording a transfer in? Or is the general fund recording due to other funds and the capital projects fund recording a due from other funds? Now, based on, just typical knowledge, typical accounting knowledge, you might be able to kind of think your way through this, especially if you're used to journal entries. Now, if you don't really know how this works, that's okay. In this short video, we're just going to be going over how to recognize the different parts of interfund transactions and things like that, and what the journal entries will be. So if you know the answer or if you want to figure it out, go ahead and pause the video. But if not, let's go ahead and take a look at the answer together. Okay, here we are. The answer is B. The general fund is going to record due from other funds, and the capital projects fund records due to other funds. Let's go through this. Because repayment is expected, this is an interfund loan, and we'll talk a little bit more about that in a second. The general fund records a debit of due from other funds for $184,000 and a credit of cash of $184,000. The capital project fund records a debit of cash of $184,000 and a credit of due to other funds for $184,000. And again, this is a loan, so, the general fund is giving away cash, the capital projects fund is receiving cash, but that's why we have the due from and the due to other funds. Interfund loans are reciprocal activities, and that's a word that you might hear or see throughout the exam, or maybe even in your review course. Again, they are reciprocal activities because the receiving fund is expected to provide something in return. And in this case, it's repayment of the borrowed amount. Reciprocal interfund activities generally include interfund loans and interfund services provided and used. So we're learning a little bit about interfund activities here, and some of them are considered reciprocal, meaning that, something is given and something is received in return, and usually it's interfund loans and interfund services. Those are reciprocal activities or interfund activities. However, there are non-reciprocal activities, and these involve moving resources without an equal exchange between the funds. They generally include interfund transfers and interfund reimbursements. And we'll talk a little bit about those as we go throughout this video, but those are essentially the things that we are going to be covering throughout this. Some of the different things like interfund loans, interfund services, interfund transfers, and interfund reimbursements, and how those are, again, how we've determined the classification for those and how the journal entries look. So we just started with the interfund activities at the beginning of this video. Now let's go to the next question to dive in a little bit more. Okay, here we are at question 2. Again, reading the last sentence first. How should the funds classify the activity? And that's going to be a similar question throughout this whole video. Let's go up to the top. A city's electric utility enterprise fund provides $47,600 of electricity to the general fund. The amount charged approximates what the general fund would have paid an outside utility. So how is this going to be classified? Is it both funds are going to report it as an interfund transfer? Is it that the general fund should record a transfer out and the enterprise fund records operating revenue? Is it that the general fund should record an expenditure while the enterprise fund records a transfer in? Or is it that the general fund should record an expenditure while the enterprise fund records operating revenue? So how is this going to be looked at? Based on what we learned in the previous question, maybe you have a small idea, but if not, that's okay. Again, we are using these questions to learn. So if you want, pause the video and think through this. If not, that's okay. Let's go ahead and take a look at the answer together. Okay, here we are at the answer D. The general fund should record an expenditure. And remember, with governmental accounting, most things that would be expenses in normal accounting are considered expenditures. Again, that's not always the case, but expenditure you're more used to seeing in governmental accounting. While the enterprise fund records operating revenue. So let's go through this. This is an interfund service provided and used. So this is a reciprocal interfund activity. The general fund records a debit of $47,600 expenditures and a credit of cash or due to other funds for $47,600. So if they paid the cash right away, then they would credit cash. If they had a loan or like they have a liability, then they would do due to other funds. And then the enterprise fund records a debit of cash if they got cash, or a debit of due from other funds, and then they would credit operating revenue because, for them, it's revenue. They received money for a service they provided, just like they would do for any other client. Interfund services provided and used are reciprocal activities. Remember, we talked about reciprocal in the previous question, and they are accounted for similarly to purchases and sales with outside parties. These activities were previously called quasi-external transactions. You may see that in the exam or in your review course, but quasi-external isn't really the thing that we say anymore. Usually you just say it's an interfund service and it's a reciprocal activity and so on. So with that, we learned a little bit more about some of the different interfund activities. Again, when there's interfund services that they could have paid for elsewhere or gotten elsewhere, then again, it's called interfund services and it's counted as a reciprocal activity. They still record an expenditure, they still record revenue, but that's not always the case. For other things, sometimes you don't record anything or it's eliminated. At any rate, now let's go to the next question. All right, here we are at question 3. How should the $38,000 be reported? Let's go up to the top. A special revenue fund previously borrowed $96,000 from the general fund. At year end, the government determines that $38,000 of the amount is not expected to be repaid. So how is this going to be reported? Is it that the funds should reduce the interfund receivable and payable and report the amount as a transfer? Is it that the general fund should report bad debt expense while the special revenue fund makes no entry? Is it that the funds should continue reporting the entire amount as an interfund loan until it is formally forgiven? Or is it that the general fund should report an expenditure while the special revenue fund reports revenue? So how is this going to be treated? If you have any idea, maybe pause the video and think through this. If not, that's okay. Again, we are using these questions to learn. So let's go ahead and dive into the answer together. Okay, here we are. The answer is A. The funds should reduce the interfund receivable and payable and report the amount as a transfer. So let's go through this. An amount that is no longer expected to be repaid should not continue to be reported as an interfund loan. The general fund reduces its receivable and records a debit of other financing uses, transfers out for $38,000, and a credit of due from other funds. Again, they're getting rid of part of their asset, which was due from other funds. They're getting rid of it with that credit. And the special revenue fund reduces its payable and records a debit of due to other funds. So now they owe less for the payable for $38,000, and they credit other financing sources transfers in for $38,000. The unpaid portion becomes a non-reciprocal transfer because the receiving fund is no longer expected to repay it. So this is where something that normally is reciprocal, which is an interfund loan, becomes non-reciprocal if they can't pay it. So they're just counting it as a transfer in and a transfer out, and they're getting rid of the payable and the receivable that is not going to be repaid. So again, we learned a little bit more there about how some of the different interfund activities are treated. Now let's go to the next question. All right, here we are at question 4. How should the reimbursement be recorded? Let's go up to the top. The general fund pays $63,400 for supplies that are the responsibility of a special revenue fund. The special revenue fund subsequently reimburses the general fund for the entire amount. So again, how is that reimbursement recorded? Is it that the general fund records revenue and the special revenue fund records an expenditure? Is it that the general fund records a transfer in and the special revenue fund records a transfer out? Is it that the general fund reduces expenditures and the special revenue fund records the expenditure? Or is it that the general fund records a receivable without reducing expenditures and the special revenue fund records a payable? So based on what we learned before, you might have kind of an idea of how this works, but that's okay if you don't. This is kind of a small topic that honestly we just need to learn in these questions. So again, if you know the answer or if you want to figure it out, pause the video. If not, let's go ahead and take a look at the answer together. Okay, here we are. The answer is C. The general fund reduces its expenditures and the special revenue fund records the expenditure. So let's go through this. An interfund reimbursement occurs when one fund initially pays an expenditure or expense that properly belongs to another fund. The reimbursement moves the cost to the fund that was ultimately responsible for it. So when the reimbursement is made, the general fund records a debit of cash for $63,400. So they're getting the money back that they received, and they're crediting expenditures for $63,400. So they're reducing their expenditures because no longer is that a part of that fund. It's supposed to be a part of the special revenue fund. So the special revenue fund does the opposite. They debit expenditures and they credit cash. The credit to expenditures removes the cost from the general fund, while the special revenue fund records the expenditure where it properly belongs. The general fund does not recognize revenue or a transfer in because it is simply recovering an amount it paid on behalf of another fund. Interfund reimbursements are classified as non-reciprocal activities, but they are not reported as transfers. After the reimbursement, the expenditure appears only in the fund responsible for the underlying supplies. So again, another non-reciprocal activity, but this is different than a transfer. It's called an interfund reimbursement, essentially just moving the expenditure from one fund to the other. They were basically covering the expenditure for a moment for the other fund, and then they're just moving that with journal entries, moving the money around. Now with that, let's go to the next question. Okay, here we are at question 5. How should the funds report the activity? Let's go up to the top. The general fund provides $79,500 to a city-operated parking enterprise fund. The amount will not be repaid, and the enterprise fund does not provide any goods or services in return. So how should the funds report the activity? Now, based on what we've learned so far, you might kind of be able to reason your way through this or think your way through this, but let's go through the options. Is it that the general fund records an interfund receivable and the enterprise fund records an interfund payable? Is it that the general fund records an expenditure and the enterprise fund records operating revenue? Is it that the general fund records a transfer out and the enterprise fund records operating revenue? Or is it that the general fund records an other financing use transfer out and the enterprise fund records a transfer in? Now, again, based on everything we've learned, maybe you could try this on your own, pause the video, and when you're ready, come back, we'll look at the answer together. Okay, here we are. The answer is D. The general fund records an other financing use transfer out and the enterprise fund records a transfer in. So let's go through this. This is an interfund transfer because resources were provided without a repayment requirement or an exchange of goods or services. So the general fund records a debit of other financing uses transfer out, and they credit cash for the same amount, $79,500. The enterprise fund records a debit of cash and a transfer in. Governmental funds classify transfers as other financing sources or uses. Proprietary funds report transfers separately rather than treating them as operating revenue or expense. Or essentially, they're not recording it as other financing sources or uses, like the governmental funds are. Now, we learned quite a few things about interfund activities and their journal entries throughout these 5 questions. Now, before we do anything else, let's do one more part of the SuperfastCPA process called Pillar Topics. Now, as a reminder, the idea behind Pillar Topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen, 2 or 3 or maybe even 4 questions talking about interfund transfers or interfund reimbursements or whatever the case is. You notice these things throughout the questions in your review course, and you pull out the key points, the pillar topics that you learned in your own words so that you, again, know the key things that you were supposed to learn from the questions. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Again, these are essentially the key points, the summary of the things that we were supposed to learn from the questions. Let's go through this. First off, reciprocal activities involve an exchange between funds and generally include interfund loans and services provided and used. Non-reciprocal activities generally include interfund transfers and reimbursements. An interfund loan is recorded as a due from other funds by the lending fund and a due to other funds by the borrowing fund. If repayment is no longer expected, the unpaid amount is reclassified as a transfer. When one fund provides goods or services to another fund for approximately their external value, the selling fund records revenue and the purchasing fund records an expenditure or expense. These were previously called quasi-external transactions, just in case you see that somewhere. Next, a reimbursement occurs when one fund repays another fund for an expenditure or expense that properly belongs to it. The fund initially paying reduces its expenditure or expense, while the responsible fund records the cost. Finally, a transfer moves resources between funds without requiring repayment or an exchange of goods or services. Governmental funds report transfers as other financing sources or uses, while proprietary funds report transfers separately. Okay, we've gone over the pillar topics and the 5 questions for this video, and that is the end of the YouTube version of this video. Remember, the member version of most of these videos is an additional 5 questions. This is one of the cases where it's not, but again, most of the time, it is an additional 5 questions. So if you like this, make sure you check out becoming a part of SuperfastCPA, because you can get access to the full versions of these videos to get a little bit more help and a little bit more understanding. And one of the best ways for you to kind of dive in and learn more about SuperfastCPA is by going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after that, of course, like I said at the beginning, you're going to want to learn more. So make sure you also check out becoming a part of the Pro members who have access to the Pro course, or getting our supplemental study materials, or getting the total bundle, which includes everything. And again, these videos are currently a part of being a Pro member and will eventually transition to be part of the supplemental study materials. So again, if you like this, make sure you check all that out. Now, I hope that you liked this video. If you did, make sure to like it and leave a comment. I hope that you found this was helpful, and I will see you in the next video.